Hi, my name is Christian Waldegrave, Head of Research at Teekay, and this is our conventional tanker market update for February 2015. Now, what we saw in January was our third consecutive month of very strong crude tanker rates. VLCC rates actually improved during January to around $60,000 to $65,000 per day. And the mid-sized tankers, the Aframax and the Suezmax, stayed fairly strong as well, with Aframax rates in the mid-30s and Suezmax in the mid-$40,000 per day range. And the rates have stayed strong for a couple of reasons. One is that the oil price has remained quite low, and that's led to a couple of things for the tanker market. Firstly, we've seen continued strong buying of crude oil, especially in the Far East and in China, and that's for both commercial and strategic stockpiling. And what we've also seen as well in January develop is the first signs of floating storage to take advantage of the contango in oil futures prices. And during January, we saw about 30 VLCCs put on time charter with storage options. Now, we're not sure at this stage how many of those 30 Vs will end up acting purely as storage, or how many will continue trading in the strong spot market. But certainly if some of those ships, as they deliver into their time charters, do go into storage, then that removes vessels from the fleet, which will have a supportive effect on VLCC earnings, which in turn has a strong impact on Suezmax and Aframax rates as well. We also saw some short-term factors giving support to rates in January. Firstly, Russian export duties fell by 40% at the start of the year. And so Russia had been holding back some exports at the end of last year. Companies were waiting until the reduction in export duties. That came into effect January 1st, and so we saw a lot more cargoes coming out of the Black Sea and Mediterranean and the Baltic as well, which was supportive of Aframax rates. And then we also saw some weather delays as well, just because of the time of year in winter. And in the Turkish Straits, the weather delays now are up to about 7 to 8 days, northbound and southbound. So that's causing some congestion in the Black Sea and Med and giving some support to rates there as well. Looking further ahead, our expectation is that the oil price will stay low throughout the first half of the year. There has been some fluctuations. Just in the last week, the price of Brent did go up about 20% from where it was last week at around $46, $47 per barrel to where it is now at $56, $57. And day by day, it can fluctuate by $2 or $3 per day. It seems like the oil price is almost finding the range where it should be. But we would think going into spring, when you have refineries going into maintenance, more oil then will move into inventories, both onshore and potentially offshore. We think that could put further downwards pressure on oil prices, and that will be supportive of tanker demand, particularly while OPEC maintains high production levels and before we see any production cuts from anywhere else in the world. In the second half of the year, we do think that oil prices will start to rebound. We don't think at the moment, just listening to what OPEC's saying, that they will make any big moves on the supply side, although you never know. They might come with a production cut in the middle of the year if they feel that the price is too low. But probably more likely what will happen is that we'll start to see some production cuts outside of OPEC. And we're already seeing, for example, in North America, that the drilling rig count is coming down in the United States. And so over time, we expect that that will result in lower US oil production, which will serve to give some support to oil prices. On the supply side, no real change to how we see the fleet developing this year, with growth of under 2%. But what we're starting to hear now for 2016 and 17 is some owners that had other types of ships on order, for example, Cape-size bulk carriers and drill ships. Because those markets are doing very poorly, some owners are looking to switch those vessels from Cape-size and drill ships and into tankers. And that's a trend that we're monitoring at the moment. According to our intelligence, perhaps about 8 Suezmax orders have appeared on the order book from switching from Cape-size, and around 15 to 20 Aframax or LR2s. But most of these will be for delivery in 2017. So for 2016, we don't see much change to our tanker fleet forecast, which is about 3.5% to 4% fleet growth. But for 17, that's something to keep an eye on, that the fleet growth for 2017 might be quite a bit higher if we start to see some berth switching and if we see some more orders coming in this year as well. So that's our update on the conventional tanker market for February, and we'll talk to you again next month.